is still holding near its two-year highs, supported by hopes for a swift recovery of fuel demand. World's major economies are steadily reopening, although at a slower pace. The current rally in the energy market is solely based on hopes for a positive outcome, but at the same time, this is a shaky ground for making forecasts. Notably, the global economy is now in a much worse state than it was before the pandemic, and back then oil prices were the same as today. Therefore, all growth potential has already been priced into the oil quotes. This means that the upside momentum may soon lose its steam, and the rise in oil prices has a speculative nature, so we can expect a pullback at any moment. Brent crude is still trading around the resistance area of $70 per barrel. Just as we predicted yesterday, the price pulled back from the level of 70.80. Given the current market conditions, this may indicate a possible reversal of the price in the downward direction. To be on the safe side, it's better to trade on a breakout in case the price holds above $70.50 per barrel on a 4-hour time frame. Meanwhile, Brent is expected to return to the area between $69.50 and $70 a barrel. WTI is following a similar trajectory. Its resistance is found at the local high from March 8 at $67.97 per barrel. It has already overcome this level. As we can see, the price has reversed towards the level of 67.80, and this is the nearest scenario for WTI, as there are currently no drivers for further growth. Yesterday, the Russian ruble pulled back slightly against the US dollar, yet the current uptrend on the ruble still prevails. If the dollar-ruble pair consolidates below 73 points, a new downward cycle is highly likely that will bring the price to the range between 72.50 and 72 rubles per dollar. A different scenario is possible if the pair settles above the level of 74 on the daily time frame. In the meantime, the euro-ruble pair continues to fluctuate within the price channel between 89.20 and 90.36. On Monday, the price bounced back from the lower boundary of this channel and is currently trading in this range. As for the trading strategy, it should be based either on a rebound or on a breakout of the above-mentioned sideways channel. The ruble has made several attempts to strengthen against its rivals and exit the narrow trading channel where it has been stuck for some time. Actually, the only driving force for the ruble comes from the situation around the Nord Stream 2 project. The fact that the US had admitted that it would be difficult to stop the project is definitely favorable for the Russian currency. Along with obvious economic advantages for Russia, it also eases the geopolitical tensions between Moscow and Washington. However, traders should not completely rely on this factor, as it may have a short-term nature with an emotional reaction to it. If we take a look at the macroeconomic data from Russia, we can see that there are no strong reasons for the ruble to advance. In other words, the uptrend of the Russian currency may turn out to be short-lived. That's all for now. Thank you for watching and stay tuned.